There's finally some breathing room in the crypto world, with Bitcoin trading today at $69,000. What happened? What's the news? We're going to talk about the relationship between Trump and Russia. We're also going to talk about the latest inflation figures that just came out and actually explain this surge. But yesterday, what happened? We were still seeing a bloodbath. We're simply talking about stocks that plunged, metals that collapsed, and crypto that once again capitulated. And all of this happened at the same time. So we're talking about a real flight from risk on a global scale. But today, the most important factor might not be the market panic. It's a possible major macro upheaval, the end of the de-dollarization narrative. We're going to talk about it. And you just have to look at what happened yesterday to get a sense of the scale of the shock. Because in just 90 minutes, more than $3.6 trillion evaporated from the markets. And often we talk about safe haven assets, but even they didn't hold up, because we're talking about gold, which lost 3.76%. That's more than 1.3 trillion wiped out. Silver dropped by 8.5%. It's simply enormous, and all of that all at once. And we also saw the S&P 500 plus the Nasdaq lose 1.2 trillion, which just went up in smoke like that. Obviously, crypto didn't escape it either. We're talking about a 3% drop in market cap, around 70 billion wiped out. And this kind of synchronized movement doesn't come from simple technical liquidations. When everything drops at the same time, it's a real deep macro signal and the true risk-off button. But let's talk about the first piece of good news, because that's what actually triggered the rally. And first of all, happy anniversary to La Quotidienne, 365th episode yesterday, 366th today. By the way, today, patience is the word of the day. Famous challenge number 126. But US inflation remains lower than expected. They were expecting 2.5%, but it actually came in at 2.4%. And before that, it was at 2.7%. So we've gone from 2.7% to 2.4%. That's why the markets reacted. And this is exactly the kind of figure the Fed wants to see before considering monetary easing. By the way, I was looking at the statistics a bit recently. There was a 9.7% chance of a 25 basis point rate cut. Has that changed? It's gone up to 9.8. Not a huge change, but these are important numbers. It's not an immediate pivot, but in a market that scrutinizes every move on the macro side, this kind of data can give risky assets some breathing room. And that's exactly what's happening right now. But be careful, because a single figure doesn't make a trend. Sometimes it's just a technical rebound. Yes, but be mindful of the overall context, which can change very quickly. But here, we're dealing with something a bit bigger, because according to several reports, Russia is considering a return to the dollar settlement system after spending 2 years promoting first the yuan and second all the alternative rails, including the BRICS circuit. So would they be leaving the BRICS? I don't know. But in any case, there are rumors that could simply trigger this major strategic reversal. And there's talk of a potential economic realignment with the United States and Trump business, Hill's business, and around them, everything revolves around global energy control. We talked about it with Greenland a few weeks ago. We're also talking about critical infrastructure and strategic resources. So it's not just a simple trade agreement. It might be a pact of power that's about to be put in place. On a macro level, if this is confirmed, of course, the de-dollarization narrative could literally collapse, and that would redraw the map. It would reshape the entire global financial architecture. To be continued, I'll talk to you about it on La Quotidienne. We're trying to breathe, but yesterday, major stress. Coinbase suffered a major outage. Users could no longer first buy, second sell, or transfer. The platform claims that funds are safe, but when you can't move your money anymore, often, well, trust is somewhat shaken and disappears immediately. And what was the impact on the market? First, reduced liquidity. Second, spreads widened and volatility increased. This really reminds us of a fundamental rule. Never leave your crypto on an exchange longer than necessary. It's only meant for trading. It's an exchange from A to B. You swap, you transfer, you buy, and then you secure your assets. Outages happen very quickly and often at the worst possible times. We're also talking about capitulation on the on-chain level, because according to CryptoQuant, we've just recorded one of the most, at least one of the biggest capitulation events ever observed. This ranks in the top 3 to top 5 in all of history here. It's comparable to the massive losses from the 2021 crash, remember? And this kind of episode corresponds to the moment when investors first are panic selling, even now. We also have losses, realized losses at least, that are skyrocketing, and the excess leverage, as always, is disappearing. These are the phases that are the most violent, but they're also the ones that clean up and reset the market. And if we take a look at the heat map right now, it's clear. Because if you look at all the criteria here, we have weak demand, fragile liquidity, low buying pressure, an undervalued market, and Julian talking at 200 miles an hour. We don't know why. And all the indicators are still red. That doesn't mean the bottom isn't near. It just means the market isn't ready to bounce back yet. By the way, maybe you'll want to play the video at 0.5 speed for once. But an important nuance, even on Polymarket, bettors estimate there's about a 68% chance that Bitcoin will revisit 60K before seeing 80. And often that's pretty tricky. We're also talking about a shutdown drop. I think I saw a 25% chance of a shutdown happening tomorrow on the famous Valentine's Day. But here it's not a price prediction, it's a psychological thermometer. And the history of markets is simple. When the majority strongly believes in one scenario, that's when reversals, these kinds of contrarian reversals, often happen. By the way, Tom Lee says we could possibly have a V bottom. I'm not very confident about that, but markets never crash just because of the price. They often crash alongside and because of a change in narrative. And today, the overall narrative is simple. 1, we have macro uncertainty. 2, we have geopolitical tensions. And 3, we have a purge of leverage. That's the recipe for today. But remember one thing, the phases of total capitulation are almost always the ones investors later regret not having bought. Remember the 2001 bubble, remember 2001, remember 2020, and you'll also remember 2026. We'll end with some bad news. There was simply an attempted home invasion targeting David Princet, the France president of Binance. I hope he's okay. He wasn't at home, but there was an attempt. This is the 8th time I've even heard it's the 13th. There are even incidents that aren't necessarily public knowledge. This has to stop. These kidnappings have to stop for the ecosystem, for France. It's very important. I also wanted to talk to you about, well, I think I've covered everything. Yes. No, actually, yes. The inflation figures here, 2.4, I was just analyzing compared to the last one. So these are the lowest numbers. That's why the market is reacting quite positively. Sorry, I spoke super fast. We're at $69,137. The word of the day, write it down, put it in the comments. We'll see each other tomorrow for a new video that's a bit special in a unique environment. Tomorrow, we'll talk about AI, the AI bubble, and how you have 5 years left. It's going to be super exciting. The day after tomorrow, we'll also talk about a new feature on Tonte Gem. And you also have this video. Go check it out to find out when, in my opinion, we'll hit that famous bottom, both in terms of time and price. Sorry for speaking so fast, but I was in a hurry. All right, ciao. Have a great weekend.